All right, accounting kids. In my last video, I just kind of gave you an intro into chapter 1, or I'm sorry, chapter 3. And so now I want to go ahead and walk you through how we're going to journalize our transactions. So the reason that I'm starting with this slide is I want you to see what the transactions are going to look like. So they're going to give you the date, August 1st, received cash from the owner as an investment, $5,000. And then this is your source document, receipt number 1. They're always going to tell you what the source document is, okay? All right, so those are what the transactions will look like. So I'm going to walk you through how to actually then journalize. Okay, so if you want to follow along, I'm going to do the work together, and I'm starting on page 62, and this is where I'm getting my information from. And the book will always give you your accounts that you're going to need. You won't have to guess at what your accounts are, like for accounts receivable and accounts payable. They'll give that information to you. Okay, so the first transaction is April 1st. You received cash from the owner as an investment for $1,500, and the source document is receipt 1. All right, so here's how we're going to journalize. I'm going to always start with the date. I just said that it was April 1st. Okay, so just like before when we were doing our T accounts, and even back in chapter 1 when we were trying to figure out how a transaction affected the accounting equation, what we're going to do is we have to look at our transaction and figure out what two accounts are being used. So if we receive cash from the owner as an investment, I know that cash is being used and the capital account. All right, so now we've got the next step is what's happening to each of those accounts. Are they being increased or decreased? All right, so if you receive cash from the owner as an investment, that tells me that cash is being increased if I'm receiving cash. All right, so if you receive cash, is that a debit or a credit? How do you increase cash? Well, I know that assets are increased with a debit because they have a normal side. Balance side is a debit. So since I've walked myself through that part, I'm going to come right here and I'm going to put $1,500. Okay, now I know, and the reason I'm putting it here is because this is my special amount column, cash, and I just said cash is increased with the debit. Okay, so now the rule is we need a credit. You're never going to have a cash, debit, and credit, so that takes that one out. And it doesn't have anything to do with sales, so the only other credit that it can be is right here, $1,500. Okay, so the rule is sales credit, cash, debit, and credit, those are special amount columns. I know what this number is. Over here in the general debit and credit columns, I know that this $1,500, but I don't know where it's supposed to go. So we're going to have to come over here to the account title, and anything that's in general debit or credit, you have to come to the account title and tell me what account is being affected. So this is going to be a capital account, and for this particular exercise, Norm Derner is the owner. All right, and so Norm Derner Capital, so because I received cash from the owner as an investment. Now, last thing that we need to do is we need to come here to our document number, and this said that it was receipt 1, so I'm going to do R1. This is going to be where we're going to put our source documents. All right, so now we have just journalized our first transaction doing double entry accounting. Two accounts were affected. We only used one line, and we're going to use one line pretty much most of the time. I'll show you there is a time when it'll be a little different. Okay, and so my next transaction is on the 2nd, and it said that we paid cash for supplies. All right, so if I'm paying cash for supplies, I know I've got cash and supplies are my two accounts. Paid cash, so if I'm paying cash, I'm losing cash. So that means that cash is going to go down. Well, how do we decrease the cash account? Well, we just said here we increase it with a debit, so that means that we decrease it with a credit. So I'm going to go ahead and put $375 right there. And then it said we paid cash for supplies. Well, it doesn't have anything to do with sales. So I'm going to come over here. So I have a credit there. That means I need a debit. So I'm going to put $375 right there. And again, now that I've used general debit, I've got to come over here to the account title, and I've got to put what account I'm talking about here. All right, so supplies is this 375. And then I've got, last thing I'm going to do is I'm going to put in my document number. Well, when we pay cash, we are writing a check. So my source document is going to be C1 because we just wrote our first check. All right, so those were the two transactions that I did on page 62. And again, if you want to follow along to see where I'm getting the information, I'm going to go now to page 66, and I'm going to do the work together 3-2, and we're just going to continue to do some of these different transactions. Okay, so this is going to be the one transaction that's going to be a little different. So the transaction reads that we bought supplies on account from Palm Supply for $500, and this is with a memo. Okay, so let's walk through this. I bought supplies on account from Palm Meadow. All right, so if I'm buying supplies, I know that supplies are an asset, and I am increasing supplies with a debit because that's how all assets are increased. And the rule is you always want to put the debit amount first. So I'm going to put supplies, and I'm going to come over here to the debit column, and I'm going to put $500. Okay, so now bought supplies on account doesn't have anything to do with a sale, doesn't have anything to do with cash. All right, so that puts us back over here to this general credit. But here's the thing. Anytime we put a number in the general debit or credit column, we have to always tell what that number corresponds to what account. So I've already used this line. So here's the one transaction that's going to actually take two lines. And so what I'm going to do is I'm going to do accounts payable, and then it said that we were buying from Palm Supply. And I'm going to go over here then, and I know that it's a credit because I already have my debit. Plus, I know that Palm Supply is a liability and that we increase liabilities with a credit. Because what this is telling me is that I bought supplies, but I haven't paid for them. So we have to show that we owe $500 now. Okay, then our source document is a memo. So memos, whenever you see a memo, this is what your transactions is going to look like. The memo is going to be a two-line transaction because we're using the general debit and credit column for both of those transactions. It does not involve one of our special amount columns. Okay, so when you see memo, this is what it's going to look like. All right, then it said that we paid cash for insurance. So I'm going to go April 7th, and then prepaid. It's not just insurance, it's prepaid insurance. And I know that it said we paid cash. So insurance is an asset, so I'm gaining more insurance. So it's going to be $300. And I'm going to go over to cash. We're writing a check, and so we're losing cash. So $300 there. And I'm going to come back here and I'm going to put C2. And again, I'm not guessing. The book is giving you that information. The book will give you your document number. All right, now it says we paid cash on account to Palm Supply, $250. So now we are paying off some of that. So I'm going to do April 9th. And if I'm paying cash, I'm going to come over here, and I know that it's a cash credit, and it's for $250. All right, and it said we're now paying Palm Supply. So I'm going to do account payable, and Palm Supply is a liability, and the way that you decrease a liability is with a debit, because now we're going to go from owing $500, now we're down to owing only $250, okay, because we paid part of that. So there's that transaction. We wrote another check, so that's going to be C3. Okay, you should be going in order. All right, real quick, and I might skip a little bit here once I've done a couple of these. Our next one's going to be April 12th, and it says that we paid cash for rent. So this is an expense, and so it's not rent, it's rent expense. All right, so make sure you're putting in, and so I know that I'm paying cash, so it's going to be $1,000, and I'm going to do cash credit, so I know that it has to be a debit. All right, so that's what that's going to look like, and we wrote a check, so C4. You should be going in order. And now I received cash from sales. All right, so here's another tricky one. It's not tricky, but this is what we're going to do. So I received cash from sales, so that tells me that sales is going to be increased, because I know sales is increased with a credit. And it says we received cash from sales. So we made some sales and we received our cash. All right. So I'm going to put 2,500 right here. Okay. So here's my debit and my credit. I did not put anything in general debit or credit, so I don't have to put anything in my account title spot right there. But in accounting, we can never leave anything blank. So what we're going to do is we are going to go ahead and we're going to just do a lowercase b. We're just going to do a little thing like that. When you see this, this just means that there is not supposed to be anything right there, because we've used two special amount columns that already tell us cash and sales. All right, and then the cash register tape is going to be T, and when you receive cash from sales, and it's always going to be the date. It's going to be T13 or T21, whatever the date is. All right, this is the only one that's not necessarily going to be chronological 1, 2, 3, 4, 5, but my next T will be something past the 13th. Okay. All right, and April 14th says we sold services on account to, excuse me, L row. So we sold services on account. So we made a sale. Okay, that's what happens. We made a sale, but we haven't received any cash yet. So this is going to be our accounts receivable. All right, so we've got a credit. Now what we're doing is we're showing that we made a sale, but we actually have not received any money yet. So we have to keep track of that. We have to show that we actually made the sale, and but now we are showing that we actually haven't received the money, but this is who we need to receive the money from. So that's going to be an S1 for a sales invoice, because we made the sale but we haven't